everyone, and welcome to our Internal Audit Insights. And today we're going to be talking about the 3 lines of defense for mortgage lending. I'm Mignonne Davis, and I'm joined by Cassidy Timm. Together, we run Internal Audit here at Ritchie May. All right, so let's dig in. To start, let's cover why the 3 lines of defense are so important for mortgage lending.
So, as we all know, mortgage lending is a complex and highly regulated industry that involves many risks, such as credit risk, interest rate risk, operational risk, compliance risk, and reputational risk. These risks can have significant impacts on the financial performance and reputation of the lender, as well as the customers and regulators. Therefore, it is essential that lenders have a robust and effective risk management system that covers the 3 lines of defense.
The first line of defense is each mortgage lending business unit. They are responsible for identifying, assessing, and managing risks. This is where operational controls are established and maintained by the business unit. Cassie, can you give us an example of the first line of defense?
Of course. So, an example of this would be the underwriting department. They have controls in place to validate that underwriters are following underwriting guidelines and internal requirements. Underwriting management is responsible for making sure that these controls are in place and that they're working effectively. This process is what would make up that first line of defense.
Okay, so we've established that the first line of defense is the mortgage lending business unit itself. Then the quality control and compliance departments are where that second line of defense comes into play by providing oversight and support to the business units. This enables the business units, which again is that first line of defense, to manage their risks effectively. The second line of defense ensures they are operating within acceptable risk tolerances. Cassie, can you give us an example?
Yeah, so let's dig into the concept of the QC department a little bit more. The QC department assesses quality of loan production to validate that those underwriting controls are operating as intended. If issues are identified, then the second line, which would be QC, will work with the first line, and in this case, underwriting, to identify those necessary corrective actions.
Now that we've covered the first and second line of defense, that brings us to the third line of defense. The third line is where internal audit comes into play, and they are providing that independent assurance and are assessing the effectiveness of that first and second line of defense. Cassie, do you want to give us another example?
Yeah, so all right, sticking with the same line of examples here, just for consistency, internal audit would perform an internal audit over the QC function and look at the QC department's performance. But they would also perform separate internal audits over the underwriting department to evaluate their performance. So the third line, internal audit, would be looking at both the first and second lines within their independent testing.
All right, so now that we've covered the differences between the 3 lines, let's talk about why these 3 lines of defense are so beneficial. Having these 3 lines established within your organization enables the company to have effective risk management, comply with laws, and maintain strong internal controls.
Plus, it also helps to improve decision making. Having these 3 lines of defense provides information to management to better understand the operations of the business and understand what's really going on.
All right, well, that's all we have for today. Next time, we'll dig in a little deeper into the Fannie Mae requirements and what they expect to see on those 3 lines of defense. See you next time.